So you want to know where Bitcoin's price might be headed,
Especially with all this talk about it hitting $1 million.
or even more.
Right.
Well, we've got this research paper we're going to be looking at today to sort of unpack this whole thing. It's
Yeah.
called Forecasting Bitcoin Price Trajectories Using a Supply and Demand Framework.
Okay.
And it's by Dr. Murray A. Rudd and Dennis Porter of Satoshi Action Education. And this is dated December 15th, 2024.
Interesting.
So very, very recent stuff.
Yeah, what's really interesting about this is that they go beyond just looking at, like, past trends.
Yeah.
Or, like, what the market sentiment is.
Right.
They actually try to, like, build a model that's grounded in economic fundamentals.
Yeah.
Like that classic supply and demand that we've all learned about.
Yeah. Yeah. Like Econ 101.
Econ 101, exactly, but with a Bitcoin twist.
Right.
You know what I mean?
Yeah. So let's talk about Bitcoin.
Okay.
So we know it's different from traditional assets.
Yeah.
We talk about this all the time. One of the biggest things is that it has a fixed supply.
Right.
21 million coins.
Exactly like a digital gold rush.
Yeah.
But there's only a finite amount of gold out there.
Yeah. And this is a huge difference from, government-issued fiat currencies.
Absolutely.
Which, as we know, governments can print.
As much as they want.
Pretty much at will.
Yeah, it's like, creates all kinds of problems. But
Yeah.
Bitcoin's different.
Yep.
Its supply is hard-coded.
Yeah.
Like it's in its DNA.
Yeah.
It can't be changed.
Yeah.
And that makes it potentially resistant to inflation.
Right. Okay. So then we've got these halving events.
Oh, yeah?
That happen every 4 years.
Yep.
Which cuts the rate of new Bitcoin creation in half.
In half.
And the paper mentions that the last halving, which was back in April 2024,
Oh, wow.
sent prices soaring to $64,858.
Yeah.
I mean, that's
Pretty crazy.
really significant.
It is.
But here's the thing.
What's that?
Not all Bitcoin is available for trading. Like that 21 million, that's not all like out there sloshing around,
Yeah.
ready to be bought and sold.
There's a good chunk that's just gone.
Yeah.
Some
of it's lost forever.
Lost forever.
People lost their hard drives or whatever.
Yeah. Or they messed up their seed phrase.
Yeah.
And it's just inaccessible.
Yeah.
And then you've got those like long-term holders.
Right.
The diamond hands.
Yeah.
Who refuse to sell.
Yeah.
No matter what.
No matter what.
They're in it for the long haul.
Yeah. And then on top of that, we're seeing more and more institutions.
Oh, yeah.
Building up these strategic reserves of Bitcoin.
It's getting serious.
It is.
This is not just a game anymore.
Wait, hold on.
Yeah.
The paper actually says that an estimated 45% of Bitcoin hasn't moved in over 3 years.
That's a huge chunk.
It's a lot.
Just sitting there.
Yeah.
It's like a sleeping giant.
Yeah, and that's where this concept of liquid supply comes in.
Right.
Right?
It's not all Bitcoin is created equal.
Right. And the paper argues that a lot of the traditional forecasting models aren't really a good fit for Bitcoin.
Yeah, they don't take this into account.
Yeah, because they don't account for this, like, shrinking pool of available coins.
The whole new ball game.
Okay, so the authors decided to use a supply and demand model.
Yeah.
But is it really that simple?
You would think, right?
Yeah.
Like Econ 101, it's a little more nuanced than that.
Okay. All right, so how does it work?
So basically, they've got this model where they use a vertical supply curve.
Okay.
And that reflects the fixed supply.
Right.
We've been talking about
21 million.
21 million.
No more.
No matter how high the price goes.
Yeah.
You can't just create more Bitcoin.
Right.
It doesn't work like that.
Okay.
So that fixed supply, it interacts with a downward sloping demand curve, which basically represents how much people are willing to pay for Bitcoin at different prices.
Okay.
So you've got this fixed supply.
Yeah.
And then you've got demand.
Yeah.
That can fluctuate.
Right.
Based on all sorts of things.
Okay, now I remember that the steepness of that demand curve is actually really important.
It's crucial.
And this has something to do with demand elasticity.
You got it.
Right.
Yeah. Demand elasticity basically measures how sensitive the quantity demanded is to changes in the price.
Okay, so give me an example.
Sure. So, like, imagine if demand is elastic.
Okay.
Right? Even a small price change could lead to a big change in how much people want to buy.
Okay.
But if demand is inelastic, the quantity demanded doesn't change that much.
Okay.
Even if the price is fluctuating like crazy.
Gotcha. So elastic means that people are really sensitive.
Very sensitive.
To price.
Yeah, like if the price goes up a little bit, they're going to run for the hills.
Yeah.
But if it's inelastic, they're like, hey, whatever.
Okay.
I'm still buying.
So how does all of this play into the model?
Well, the interesting thing is they actually explore different elasticity values to reflect how Bitcoin's role might evolve over time.
Interesting.
So, like early on, it was very speculative. So demand was probably pretty elastic.
Right.
People were just gambling on it.
Yeah.
But as Bitcoin matures and gains acceptance as a store of value, we might see demand become less sensitive to price swings.
Okay, so they're not just assuming one fixed level of elasticity.
Exactly.
They're looking at how it might change as Bitcoin evolves.
They're acknowledging that this isn't a static situation.
Interesting.
Bitcoin is constantly changing.
Yeah.
And its role in the market is changing too.
Okay, now I do remember reading in the paper that they didn't just rely on the supply and demand model.
Right.
They looked at some other model.
Yeah, they briefly mentioned it.
Yeah.
A couple of alternative models.
Yeah, like what were some of those?
So there's the stock-to-flow model,
okay,
which basically relates scarcity to value.
Right.
And then there's this energy-based valuation,
Okay.
which looks at like the cost of Bitcoin mining.
Okay. Interesting.
But ultimately they chose the supply and demand framework.
Yeah.
Because they feel like it just provides more robust and nuanced way to look at it.
To really model Bitcoin's unique characteristics.
Exactly.
Okay, so we've got this fixed supply. We've got this potentially shrinking liquid supply.
Right.
And we've got this nuanced view of demand elasticity. And all of this is feeding into their model.
It's all connected.
It's all connected. I'm really curious to hear what their projections are.
Yeah.
But before we get to that, can we dive a little deeper into the specific factors that they identify as driving price changes?
Yeah, let's break it down.
Okay.
So they really hone in on two key forces.
Okay.
The first one is increasing demand, particularly from institutions.
Right.
And then the second force is that shrinking liquid supply.
Yeah.
We talked about.
They
see these two things as being the primary factors that could really send Bitcoin's price on dramatic upward trajectory.
Okay.
It's like a recipe for a moonshot.
Gotcha.
You know what I mean?
All right, so let's dig into that then.
Let's do it.
Let's start with the demand side.
Okay.
The paper talks a lot about institutional adoption.
Yeah, that's a big one.
What's driving that?
So we're seeing a bunch of things happening at the same time.
Okay.
It's like all these forces are converging.
Yeah.
You've got companies like MicroStrategy out there, just buying tons and tons of Bitcoin.
Right.
They're basically saying, we think this is digital gold.
Right.
And it should be on our balance sheets.
Right.
Just like we hold gold.
Yep.
And then you've got these new accounting standards from the FASB that basically make it a lot easier for companies to actually hold and report their Bitcoin holdings.
Right.
So it's becoming more legitimate in the eyes of the traditional financial world.
Yeah.
And then the thing that I think is the most interesting is that you're starting to see governments exploring this idea of strategic Bitcoin reserves.
Yeah, that's really interesting.
It's crazy, right?
Yeah, and the paper actually mentions Senator Lemis's proposal.
Oh, yeah.
For the U.S. government to hold Bitcoin reserves.
That's a game changer.
I know, it's wild.
If governments start doing this, especially if they're acquiring it in large quantities, that could have a huge impact.
Yeah, on the supply.
On the supply.
Right, because the supply is already limited.
Exactly.
Okay, so we've got all these companies and potentially governments driving up demand.
Driving up demand.
But the paper also goes into the supply side.
Yes.
And this idea of a supply shock. So walk me through that.
So they're basically modeling what happens when you combine this increasing demand with a reduction in the liquid supply.
Right.
And it's not just about institutions buying up Bitcoin.
Right.
It's also about individuals.
Yeah.
You and me.
Right.
Taking our Bitcoin.
Yeah.
Putting it in cold storage.
Right.
Basically taking it off the market.
So it's not even necessarily people selling it.
Not
just people taking it out of circulation.
Taking it out of circulation.
And not using it. Just holding it.
ODLing it.
ODLing it.
As they say.
Right. So if even just a small number. Like a few thousand Bitcoin are taken out of circulation every day.
Every day.
That could have a noticeable impact on price.
It could.
Even though it's not a huge amount.
Right, because remember, the total supply is fixed.
Yeah.
And we already talked about how a good chunk of it is already illiquid.
Yeah.
So even these relatively small withdrawals can create this supply shock.
And drive the price up.
It's
kind of like almost like a game of musical chairs.
Oh, I like that.
Where the number of chairs keeps decreasing, but the music keeps playing.
That's a perfect analogy.
And we're already seeing evidence of this supply shock happening.
In the real world.
Yeah,
like if you look at the on-chain data, you can actually see more and more Bitcoin.
Yeah.
Moving into these long-term storage solutions.
Right.
Both individuals and institutions are doing this.
Interesting.
And I think as more people become aware of Bitcoin scarcity, this trend is just going to accelerate.
It makes sense.
Yeah.
Okay, so we've got rising demand,
shrinking supply.
It seems like the stage is set for a Bitcoin price surge.
It seems that way.
But what does the model actually predict?
Yeah, let's get to the numbers.
What kind of numbers are we talking about?
All right, so they've modeled a couple of different scenarios.
Okay.
And the results are pretty interesting.
Okay.
Their most conservative scenario, which is based on the market conditions.
Okay.
As of December 2024, projects that Bitcoin could hit $1 million by mid-2028.
Wow.
Assuming that those significant daily withdrawals we were talking about continue.
$1 million by mid-2028.
That's not that far off.
It's not that far off.
Like we're talking...
A few years.
But
that's just their conservative estimate.
Right.
They also have what they call a bull scenario.
Yeah.
Which is based on more rapid institutional adoption.
Yeah, they're basically saying, what if things really heat up?
Yeah, what if everybody jumps in? Okay, tell me about the bull scenario.
All right, so in this scenario, they're projecting that Bitcoin could exceed $1 million by early 2027.
Wow.
And then potentially reach $2 million by late 2027.
Wow.
And then under certain conditions, especially with like really significant supply reductions, they see it hitting $5 million. $5
million?
By early 2031.
I mean...
That's crazy, right?
These are huge. Some pretty crazy numbers.
Yeah.
I mean, are we talking about Bitcoin being worth more than gold at that point?
It's possible.
Wow.
So they actually compare Bitcoin's projected total asset value under these different scenarios to gold's current market cap, which is somewhere around $16 trillion.
$16 trillion.
And in some of their scenarios, Bitcoin blows past that.
It's hard to wrap your head around.
It is.
But, I mean, that's where it gets really interesting, right?
It does.
Like, we're not just talking about the price of Bitcoin. We're talking about, like, a potential paradigm shift.
Absolutely.
In the way we think about money.
Yeah, and value.
Like,
this could have huge implications for the global financial system.
We do have to be careful, though, right?
Of course.
Because this model is based on
it's embodied
assumptions and projections.
It's a simplification.
The world is a very complex place.
Yeah, the world doesn't always follow the script.
A lot of things could happen.
Exactly.
That could throw these projections off.
Right.
So what are some of the limitations?
Yeah, so the authors are actually very transparent about this.
Okay.
They acknowledge that there are a lot of factors that could influence Bitcoin's price.
Yeah.
That are really difficult to model.
Right. Like what?
So one of the big ones is lost coins.
Yeah.
Like we can estimate how many have been lost, but it's hard to know for sure. And if that number is a lot higher than we think, that obviously changes things.
Right. That impacts the supply.
It impacts the supply.
What else?
They also point out that the Bitcoin network itself could change in the future.
Right. The technology is evolving.
It's evolving.
Yeah.
And things like layer 2 solutions, which could increase the transaction throughput and potentially change the whole supply and demand dynamic.
Okay. So the model is taking a snapshot in time.
It's a snapshot.
But things could change.
Things could change.
Anything else we should keep in mind?
They also talk about this idea of hyperbolic price growth.
Okay.
Which is basically where the price goes up so fast that it becomes unsustainable.
Right.
And then you get a sharp correction.
Like a bubble.
Yeah, like a bubble.
And we've seen this happen.
We've seen this before.
With Bitcoin in the past.
Yeah.
And they acknowledge that it's a possibility.
They do.
It's just hard to predict.
Very hard to predict.
When
it's going to happen.
Yeah, like you can't really time. The market.
It's like trying to predict when a bubble is going to burst. Yep. You know, it's going to happen eventually.
But you don't know when.
But good luck trying to figure out when.
Okay, so we need to approach these projections.
Yeah.
With some healthy skepticism.
With a grain of salt.
The model provides.
It's a valuable tool.
Yeah. Insights.
It gives us insights.
But it's just one piece of the puzzle.
Right.
There are a lot of other factors to consider.
Absolutely.
And the future of Bitcoin.
Yeah.
Like any asset.
It's uncertain.
It's uncertain.
We just don't know.
You know, it seems like we've mostly been talking about all of this from like a U.S.-centric perspective.
Right.
The paper focuses on the U.S. dollar value of Bitcoin, but what happens when we start thinking globally?
That's a really good point.
Yeah.
And it's something that the paper doesn't really dive into.
Right.
But what if other countries, maybe they're facing their own economic challenges.
Right.
Or they're just looking to diversify their reserves.
Right.
Start accumulating Bitcoin in a big way.
In a big way.
Yeah. What happens then?
It's really interesting to think about.
It is.
Like you could have countries basically competing for
Bitcoin.
For this limited supply of Bitcoin.
It's like a modern day gold rush.
Yeah.
But with digital assets instead of physical ones.
Imagine central banks.
Oh, yeah.
Around the world.
Yeah.
Not just holding Bitcoin as part of their reserves, but actively trying to acquire more.
Trying to outbid each other. That would put even more pressure on the liquid supply.
Right.
And it could drive prices way beyond.
Way beyond what the model predicts.
It could go parabolic.
And it wouldn't just be central banks.
No.
Right.
You could have corporations.
Yeah.
Investment funds.
Yeah.
Wealthy individuals.
Yeah. From all over the world.
From all over the world.
Jumping into this.
Like a global game of Monopoly.
And we're already seeing signs of this.
We are. I mean, countries like Russia have openly talked about adding Bitcoin to their reserves.
It's becoming more and more mainstream.
It is.
And as more countries face economic uncertainty or they start to lose faith in the current global financial system, this trend could really pick up steam.
I think it's inevitable.
Yeah.
The writing's on the wall.
It's almost like a self-fulfilling prophecy.
It is. As more people and institutions believe in Bitcoin, they buy more.
They buy more, which reduces the supply.
Which drives the price up.
Which makes it more valuable.
It's a positive feedback loop.
And that's the network effect.
Exactly. It's one of the things that makes Bitcoin so fascinating.
Yeah.
And potentially so disruptive.
So where does this leave us?
That's the million-dollar question.
We've got this asset with a fixed supply, growing demand.
From everywhere.
From all over the world.
All over the world.
And this potential for a global competition.
A global race.
That could really supercharge price appreciation.
Yeah.
So should we all be running out to buy Bitcoin right now?
That's a personal decision.
Okay.
I can't give you financial advice.
Of course this isn't financial advice.
Right.
Yeah.
Everyone needs to do their own research.
All right, and make their own decisions.
Based on their own circumstances, their own risk tolerance.
Yeah, the research paper provides some interesting insights.
It does.
But it's not a crystal ball.
It's not a guarantee.
And investing in Bitcoin, like any asset,
it carries risks.
Involves risks.
There's no such thing as a free lunch.
Exactly.
You know,
right.
You could lose money.
I think what's really valuable about this research is that it really challenges us.
It does.
To think differently.
To think outside the box.
About money and value.
What is money?
Yeah.
What does it even mean?
And to consider the possibility that Bitcoin could play a really significant role.
A major role.
In the future of the global financial system.
I think it already is.
Yeah.
But it's only going to get bigger.
And it's a reminder that we're still in the early stages.
The pioneers.
Of this experiment.
Yeah.
I mean, Bitcoin's less than 20 years old.
It's a baby.
Who knows what's going to happen?
The future is unwritten.
In the next decade or two.
Don't get me wild.
This deep dive has definitely given me a lot to think about.
Me too.
I'm starting to see why people are so passionate about Bitcoin.
It's more than just an investment.
Yeah.
It's a technology.
An idea.
It's an ideology.
Yeah.
And for some people, it's a belief system.
Yeah.
It's about freedom.
It's about the future.
It's about taking control.
Well, we always encourage our listeners to do their own research.
Absolutely.
To their own conclusions.
Don't just take our word for it.
And if this conversation has piqued your interest, we highly recommend checking out the full research paper.
By Dr. Rudd and Dennis Porter.
We'll include a link in the show notes.
It's a good read.
And if you have any thoughts or questions, please share them with us.
We love hearing from you.
We love engaging in these conversations.
Absolutely.
Thanks for joining us on this deep dive into the world of Bitcoin price forecasting.
Until next time.
Keep exploring.
Keep learning.
And stay curious.
Stay curious.